A microstrategist with a 30-year track record just went on camera and gave specific price levels, specific company names, and a specific timeline for the next big move in Bitcoin and AI infrastructure stocks. This week on Signal and Sense, 3 signals from Jordi Visser, one of the sharpest macro minds tracking the intersection of AI, inflation, and commodities right now. Welcome back to a episode of Signal and Sense, and this is going to be a good one. The show where we track what the people building the future and paying attention to Welcome back to Signal and Sense, and this is going to be a good one. The show where we track what the people building the future are paying attention to so you can do your own research from a smarter starting point. I read the transcripts so you don't have to. Quick reminder before we dive in, nothing in this video is financial advice. We track signals, not give stock tips. Do your own research, talk to a financial professional, and make your own decisions. This week, we are tracking Jordi Visser, macro strategist, founder of Visser Labs, and one of the most data-driven voices at the intersection of AI disruption, inflation, and commodity markets. Jordi appeared on Anthony Pompliano's podcast this week in a conversation titled Bitcoin and AI Will Dominate the Next Rotation. The transcript is linked in the description. 3 signals, 3 publicly traded opportunities. Let's get into it. Signal number 1 is the infrastructure layer that Jordi says most investors are still underestimating: optical fiber and the semiconductor supply chain feeding the inference explosion. On the podcast this week, Jordi laid out a specific thesis he has been tracking since November across 5 separate research pieces. His core argument: we do not have enough compute to meet AI demand, and the companies supplying the physical infrastructure to build it are still under-owned. He said, and this is worth writing down, GPU rental rates have no availability. Meta did a deal with CoreWeave. Anthropic went to Google for TPUs, not because Google's chips are better than NVIDIA's, but because okay. Signal number 3 is the infrastructure layer that Jordi says most investors are still underestimating: optical fiber and the semiconductor supply chain feeding the inference explosion. On the podcast this week, Jordi laid out a specific thesis he has been tracking since November across 5 separate research pieces. His core argument: we do not have enough compute to meet AI demand, and the companies supplying the physical infrastructure to build it are still under-owned. He said, and this is worth writing down, GPU rental rates have no availability. Meta did a deal with CoreWeave. Anthropic went to Google for TPUs, not because Google's chips are better than NVIDIA's, but because there was literally no other option. He named 3 specific companies he has been tracking since these themes emerged: Corning, ticker GLW, for the optical fiber, which he said is up violently since he started covering it; Marvell, ticker MRVL, which he said is up 30% in less than 2 weeks after NVIDIA's deal with them; and Teradyne, ticker TER, which he said has gone from around 110 to over 300. Go look at Corning, Marvell, and Teradyne. Here is the specific infrastructure insight Jordi shared that most people are missing. Everyone talks about training compute, the massive GPU clusters used to build AI models. Jordi's argument is that we are now past training as the primary bottleneck. The new bottleneck is inference. AI models actually doing the work, generating tokens, answering queries, running agents. And the inference traffic moves directly than training traffic. He said the optical fiber needed is coming from east-west traffic inside data centers, chips talking to chips across racks, not just north-south internet traffic. That is a specific architectural insight that explains why optical fiber companies like Corning are seeing violent moves. The cables connecting GPUs inside AI factories are becoming as important as the GPUs themselves. Jordi also mentioned NVIDIA did deals with Corning and Lumentum, both optical network companies, as further confirmation that the compute bottleneck is now a physical connectivity problem. He also called out Dell and HPE alongside these names are as companies receiving the CapEx flowing through the AI infrastructure build out. All of them, in his words, are related to the same thing: under investment, meaning massive demand. Signal number 2 is the most time sensitive thing Jordi said this week, and he gave a specific price level to watch. Jordi has been tracking Bitcoin correlation to software stocks for years. His argument has been that Bitcoin, being built on code, traded like a software growth asset. When software sold off, Bitcoin sold off with it. That correlation, he said this week, has now broken. For the first time, Bitcoin is starting to trade independently, following the S&P while software does not. Here is a specific level he gave. If Bitcoin trades above 76,000, at the same time Ethereum trades above 2,400, that combination, in Jordi's view, is the beginning of a substantial move for the rest of the year. He called it a timing signal, not just a directional one. The cleanest publicly traded vehicle to track this thesis is the iShares Bitcoin Trust, ticker IBIT, IBIT, BlackRock's Bitcoin ETF, which is now one of the fastest growing ETFs in history and the primary institutional entry point into Bitcoin. Go take a look at iShares Bitcoin Trust, ticker IBIT. Here is the macro engine Jordi says is about to ignite Bitcoin, and the timing is specific. Jordi pulled historical Bitcoin return data going back to 2010 and broke it into 5-year episodes. His finding: in every single period, the best returns of Bitcoin, over 100% of all gains, came when the Fed was on hold and cutting rates combined with negative real yields. Negative real yields means inflation is running above short-term interest rates. Here is the catalyst he identified for right now. 3-month rates are sitting around 3.65%. Headline CPI is at 3.3% and rising. Jordi's view is that what rolls off in next month's CPI print, a very low reading from a year ago, gets replaced by a much higher number, pushing headline inflation above the 3-month rate. That puts us in a negative real yield territory. His words: there is your catalyst. He also noted the weekly MACD MACD is crossing this weak point on Bitcoin, a technical confirmation layered on top of the macro setup. He said he is personally moving money out of money markets into Bitcoin right now because of this combination. Signal number 3 is one of Jordi says most investors are completely ignoring because they are too focused on software names, commodities, and the physical infrastructure feeding the AI build-out, with a specific focus on thermal cooling. Jordi's macro framework this week, it was blunt: long hardware, semiconductors, and commodities; short software and private credit. He has held this view since the start of the year and said this week it is not changing for the rest of 2026. His argument is that AI is deeply inflationary for anything physical and underinvested: energy, commodities, optical fiber, cooling systems. The specific name he highlighted in the thermal and cooling space is Modine Manufacturing, or ticker symbol MOD. His reasoning is straightforward: more AI compute means more heat. More heat means more cooling infrastructure. Data centers running NVIDIA GPU clusters at scale generate enormous amounts of heat and require increasingly sophisticated thermal management systems. Modine builds exactly that. It is a small cap name, which Jordi specifically said is where the opportunity is in this market. No large caps. Go take a look at Modine Manufacturing, ticker MOD. Here's the broader argument Jordi makes that reframes where you should be looking for opportunity. Most AI investor attention goes to large cap names, the hyperscalers, the big software companies, the mega cap tech stocks. Jordi's view is that this is exactly wrong for this moment. He said large cap stocks have not done well this year. The Russell 2000 is outperforming the S&P, and the companies actually receiving the capex from the AI build-out: optical fiber suppliers, thermal cooling manufacturers, chemical companies, advanced packaging names are overwhelmingly small and mid cap. His framework is simple: follow the capex. Hyperscalers are spending at historic rates on AI infrastructure. That spending lands somewhere. It lands on GPU manufacturers, on the companies making the cables connecting those GPUs, on the companies cooling the racks those GPUs live in, and on the commodities: copper, energy, rare materials that make all of it physically possible. Jordi also pointed out that energy, as an entire sector has half the market cap of NVIDIA alone, which in his views means there's enormous room for re-rating if energy's role in the AI build-out is properly priced. He specifically mentioned chemical stocks alongside Modine as names worth researching in the small and mid-cap space. So what connects Corning, Marvell, and Teradyne, the Bitcoin trade via IBIT and Modine Manufacturing? Jordi's thesis this week came down to one word: scarcity. We do not have enough optical fiber. We do not have enough compute. We do not have enough cooling capacity. We do not have enough energy. And in a world of scarcity, the companies supplying the scarce things win. At the same time, he is watching Bitcoin decouple from software, which he says is the market telling you that the old correlation is broken and a new one is forming. Bitcoin is becoming a scarcity asset in a world of elevated inflation, negative real yields, and weakening dollar. The macro setup and the technical setup are aligning simultaneously for the first time since the early part of the cycle. Three signals all pointing at the same underlying reality. AI is an insatiable consumer of physical resources, and the market has not fully priced that in yet. Jordi's view is that we are still in the first inning, not one out yet, not even one out yet. So now let's bring it home. Three signals from Jordi Visser this week, sourced from his conversation with Anthony Papiano's podcast on April 11th. One, Corning, Marvell, Teradyne, the optical, fiber, and semiconductor infrastructure companies Jordi says are under-owned relative to the inference explosion driving AI content. Two, iShares, IBIT. Jordi gave a specific trigger. Bitcoin above 76,000 combined with Ethereum above 2,400 signals a substantial move. The macro catalyst, negative real yields, arrives next month's CPI print. Three, Modine Manufacturing, the small cap thermal cooling play on the simple reality that more AI compute means more heat and more demand for infrastructure managing it. As always, do your own research. These are signals, not recommendations. But if you want to know what one of the sharpest macro minds tracking AI and commodities is watching right now, now you know. Which of these three signals are you most curious about? Drop it in the comments. And if you found this useful, hit subscribe. Do this several times a week. 3 different speakers, 3 different signals, all sourced from their actual words. See you next time on Signal and Sense. Take care.